All right, here is our 15-4-hour balance sheet. Please spin around. Eyes up here, please. Balance sheet. Our balance sheet has changed. When we did a balance sheet in our first unit, we had two sides to our balance sheet. On the left-hand side, we had our assets. And then we totaled up our assets, and then we had a number. And then on our right-hand side, we had our liabilities and our owner's equity. We totaled those numbers, and I told you, make sure that the line that your total assets are on is the same line as your liabilities and owner's equity. That type of balance sheet works really good when you don't have a lot of counts. But now, our list of assets is getting pretty big, as well as our list of liabilities. So what we are doing now is we are moving more to a vertical layout for our balance sheet. You will notice that we have 3 columns here for numbers. We're going to apply the same principle that we did when we went through and did our income statement, knowing that we have to get our totals to our right. At the top of all of our financial statements, we always have to have our 3 lines. It's always going to be the name of the business, the name of the document, and the date. Now, we've done 3 financial statements throughout the last couple weeks. Our worksheet. The worksheet's always going to be prepared for the fiscal period. So let's say for month ended, for year ended, for quarter ended. Same thing for our income statement. We figure out our net income not for one day, but we figure it out for whatever our fiscal period is. Same thing for our statement of stockholders' equity. We are going to go through and we are going to calculate what our statement of stockholders' equity was for this fiscal period. Now, when we get to our balance sheet, I can't say for the whole entire fiscal period, this is what my accounting equation was. I can only say that on this one specific day, this is what my balance sheet is equal to. So when you do your balance sheet, you need to remember that your date is going to be for a specific day, not for a fiscal period. Okay, so it's going to be a little bit different. So let's go ahead for Interstate Tires, get our heading on the top of the name of the business, the name of the document, which is a balance sheet, and then the date, please. Now, how am I going to tell the difference between an income statement and a balance sheet? Ms. Seafer, that is not what we're doing right now. Eyes up here. Dalton, how am I going to know the difference between an income statement and a balance sheet? 3 columns, not 4. What else?
It doesn't say for a year.
Nope. Income statement has this one skinny column on the right that says percent of sales. Okay? So when you are looking at all of these documents together and you have to figure it out, you will know that a balance sheet, like Dalton said, has 3 columns. An income statement will always have that last column that will say percent of sales. So that's going to be an easy way for you to tell the difference between which one's going to be your balance sheet and which one's going to be your income statement. Okay. They did give us, for completing this assessment, our statement of stockholders' equity and our worksheet, because I need all of that information in order to complete my balance sheet. Now, some numbers I'm going to get from my statement of stockholders' equity, some I'm going to get from my worksheet. If I am getting it from my worksheet, which columns will I get them from? Balance sheet columns, not trial balance. Why? Trial balance has numbers that have not been adjusted yet. We are preparing a balance sheet. So therefore, I need to use my numbers from the balance sheet column of our worksheet. So please remember that. Okay, we're going to start. What do you think is going to show up on our first line here? We have to give our classifications. Oops, I just typed in cash and I really wanted to say assets. You will notice that assets goes in centered because it is a heading for everything that is listed below. Now, what I need to do is I need to go in and now list my asset accounts. So you still need to know, looking at your worksheets, which one are your assets, which one are your liabilities, and which ones would then be your stockholders' equity. Liabilities always have what in the name of the account? Payable. So that will be one of the easiest ones. That was awesome. Loved it. It's Friday, we just got some sugar. Okay, now we have two classifications of assets. We have current assets and we have plant assets. So don't start filling in stuff because you're going to have to move it. Okay? Current assets are the ones that are easier for us to change into cash. Okay? So, our classification next is going to say current assets. And it's going to be followed by a colon. I don't have any number associated with it. I am now going to list cash. Cash is going to go in the middle column for $12,848. My next one is petty cash. Goes in the middle column for $300. Now, looking at my worksheet, I am working my way down. I did cash, I did petty cash. Now look at line number 3. What is my account?
Accounts receivable.
What's below it? So I have an asset and I have a contra account for my asset. The contra account needs to go on my balance sheet. So I am going to write accounts receivable. Below it, guess what I'm going to put in? Less allowance for accounts receivable. And those two numbers are going to go in the first column. So I'm going to do accounts receivable. And I'm going to put $18,438.90 in the first column. Then I'm going to say less allowance for uncollectible accounts, and I'm going to put $2,527.29 in the first column. Now, do you remember when we did this on our income statement? Okay. So I have these two numbers in the first column. I'm going to add these. I'm not going to add. I'm going to subtract these two numbers, and where's the total going to go? Right there. So I'm going to take my $18,438.90, subtract my $2,527.29, and I'm going to get $15,911.61, and that's going to go in the middle column. That is the difference between my accounts receivable and my less allowance for uncollectible accounts. My next asset account is merchandise inventory. You need to take your number from your balance sheet, and your balance sheet number for merchandise inventory is $188,999.25. Right here. I'm getting it from right here on my balance sheet. Then I'm going to do supplies office. In the middle column, I'm going to put in my balance of $854.59. Again, getting it right from my balance sheet. Supplies store. In the middle column of $1,300.68. Don't miss that 68 cents. Prepaid insurance. $300. That is your last current asset. Below that, we have our plant assets or our equipment. So below prepaid insurance, I'm going to put in the word that's going to say total current assets. And I am going to add up this middle column. I don't have to worry about the first column here because I already have the total of it from right there. So I am now going to add up my middle column column, and the total is going to go over to the right. Take a couple minutes, work on that, please. Once you have your total current assets in there, we're going to go through now and do our next type of assets, and that's going to be our plant assets. So I'm going to put in a heading that's going to say plant assets followed by a colon. No numbers go there. What I need to do now is I'm going to be listing my different type of equipment. So I'm going to put in office equipment. And the value of my office equipment is $18,486.38. And that's going to go in the first column. Why? Because I have a depreciation for office equipment. That's going to go directly below it, and it's going to say less accumulated depreciation office equipment. And my depreciation is $13,745.25. Now, just like we did on our income statement, and just like we did above here, I have these two numbers. I have to subtract the difference between those, and the total is going to go here. So that is going to be $4,741.13. I will do the same thing for store equipment. And then less accumulated depreciation store equipment. Now, we subtract out the value of our depreciation because the more we use something, the less it's worth. It is not good business practice for me to have a computer that I bought 10 years ago that I paid $3,000 on my books for $3,000. Why? Because can I sell a computer that I bought 10 years ago for $3,000? Can I sell it today for $3,000? I'll be lucky to get $100 for it. I might be able to scrap it and get my scrap money for it, but I'm not going to be able to get it sold. On our balance sheet, we have our asset, and below that we have our value of our depreciation, because that is truly what the value of that equipment is. If we needed to sell it to get some cash. That is why we have the depreciation for each one of our plant assets. So I have my value of my office equipment less my depreciation, the value of my store equipment less my depreciation. I'm going to add these two numbers up. That's going to give me my total plant assets. Then guess what I'm going to do? I'm going to have total assets where I'm going to take my total current assets plus my total plant assets, and that's going to give me my total assets. Now, my next line is going to be what? If I'm done with my assets, what's my next part of my accounting equation? Liabilities. Now, liabilities are easier to do on our balance sheet. All I need to do is list them all, starting with accounts payable, going all the way down to dividends payable, and I'm going to list them all and put the numbers in the middle column. There's no less thans or adding to, so it's just going to be straight listing just like you did for your expenses. So my first one I'm going to do is accounts payable, even though I put the word accounts receivable in for me. And I'm going to put in $16,107.08 in the middle column. Then I will do federal income tax payable for $2,603.79. Employee income tax payable, $840. Social Security tax payable for $529.98. Medicare tax payable $123.95. Sales tax payable. Sales tax payable is $1,848.25. Unemployment tax payable federal for $32. Unemployment tax payable state, which should always be higher, $216. Health insurance premiums payable is going to be $620. U.S. savings bonds payable. U.S. savings bonds payables is $35. United Way donations payable. $40. And then our last liability of dividends payable is going to be $2,200. That is your last liability. Then below that, you should put in total liabilities. I made a mistake. This one's gonna make you angry.
Oh, no. No, that's what I had before.
Sorry, I forgot current liabilities. I knew something wasn't lining up right, so I have to move all of mine down.
Good thing I did that.
Sorry, I was looking at it and I'm like, I missed something.
Good thing I didn't listen to this.
I'm human, I make mistakes. It is Friday.
At least it's easier around here.
Oh, wow. Yeah, dividends payable is the last one. And I knew I had missed a line because after my last line of dividends payable, it did not give me that black line to show that I had a total. So that's why I'm like, I missed something, and I was going back, and that's when I realized I forgot the word current liabilities. So you should have your total liabilities. When I added up total liabilities, I got $25,196.05. Now, your last section is going to say stockholders' equity. Stockholders' equity, you have to get from your statement of stockholders' equity. Do not get your numbers from your balance sheet. It will not come out. It never will come out. Have to get your numbers from the statement of stockholders' equity for your stockholders' equity section on your balance sheet. Because we calculated it so it would be affected by our net income. If you look at your worksheet, your stockholders' equities numbers have not had your net income added to it yet. So on my balance sheet, after my total liabilities, I put in the heading of stockholders' equity. Now, I need to use my capital stock and my retained earnings from my statement of stockholders' equity. And you can see these numbers are right here. I don't need to worry about these dollars per share issued during the year. All I need to be concerned with is my totals on the right-hand side of my statement of stockholders' equity. Okay, so I'm just going to move this over a little bit so I can see my numbers. My first line is going to say capital stock. And that's going to go in the middle column. And that is going to be $110,000. That is my first total on my statement of stockholders' equity. My next one is going to be my retained earnings. My retained earnings is $100,706.83. How did I get that? Right here. This is what you calculated yesterday. So then my total stockholders' equity is $210,706.83. Which I, again, got right from my statement of stockholders' equity. Now, this is where your math has to work out. Do not add all the way down the right-hand column. Okay? You will notice up towards the top there, below total assets, you see that double line. You need that number, that $235,902.88, to equal this number down here in the bottom. All I need to add right now are these two numbers. If these two numbers added together, my liabilities and my stockholders' equity, equals my assets, life is good. If it's not, you've made a mistake someplace and you need to go back and double check. So, you are going to have a total halfway down on your balance sheet for your assets that needs to equal the same total on the bottom. If it doesn't, you've made a mistake. Take the time, go back, look for it, ask me for help. I want to help you to get it come out. I like teaching students how to troubleshoot where to get your numbers to come out correctly. How do we do? Is our number going to equal here? Your last one should say total liabilities and stockholders' equity. Yay! I got them all right. Yippee! You don't need to do it on your own.